Hi guys, welcome back to our channel Investing with A. Hope you're all good and keeping well. So this week's video is going to be broken down into 5 stages. How UK tax is actually spent. We're going to be going over the UK budget, income tax and how it's calculated, national insurance and how that is calculated, student loan repayments and when you have to start paying that back. And if you stick around to the end guys, I'm going to be giving you 3 live examples and a walkthrough of my personal spreadsheet and a income tax, national insurance and student loan repayment calculator. Catch you after the intro guys. So what are our tax pounds actually spent on? So it's very important guys, everyone knows about the UK budget. How you go about doing that is you type in UK budget and the year into Google, click the first link. Who sets the budget is the Chancellor of the current time. At this current time is Chancellor Rishi Sunak. You click documents, web accessible version. The page we are actually interested in is page 11. This is a chart of public sector spending for 2021 to 2022. As we can see, it's broken down into all the various different aspects. If we quickly go over the sectors, we can see social protection is at 302 billion, personal social services 40 billion, health or the NHS is 330 billion, transport 51 billion. We've got education. This would be schools, sixth forms, colleges, even universities to a certain extent. 124 billion, excuse me. And then we've got defense, which would be the army defense contracts, 60 billion, 70 billion on industry, agriculture and employment, housing and environmental at 33 billion. Then we have debt interest repayments at around 45 billion. So at the end of every paycheck where you get that cut of your tax, this is where your tax gets spent. To find the current year's tax thresholds, rates and codes, we must come over to the government.uk site. Click on the tax thresholds and we can see it's broken down into this table. But what does this table actually mean? Here we have the first row. This is the personal allowance. Rishi Sunak has set it this year to be 12,570. Anything below this value is interest free. The third threshold would be 40% on earnings between £37,701 to £150,000. The last and final threshold would be earnings over the 150 mark would be paying 45%. That's all good me saying all of this, but what does this actually mean? We head over to our spreadsheet and I'll give you an example. Doing in this spreadsheet is taking what we've seen on the UK government site in terms of income tax thresholds, personal allowance, and we're going to be giving real examples. So here I prepared 3 different people, all with 3 different job titles and 3 different salaries. So we have Sarah the secretary on 20,000, we have Sam the solicitor on 60,000, we have Bendy Broken City on 100,000. They all have the same tax code of 1270 AL, so they all have a personal allowance of 12,700. How you work out your personal allowance guys is you take your tax code before the AL, so 1270 in these 3 cases, times by 10 and you get a personal allowance. Personal allowance is tax-free money. You pay 0 tax on anything you earn below this amount. So we're going to make assumptions that they all attended uni. No, they don't pay into their pensions, and one by one we're going to work out how much tax they all pay. So starting off with Sarah the secretary on a £20,000 yearly salary, equating to 1,666 a month. Personal allowance is 12,700. Her taxable income would be the yearly salary minus the personal allowance, giving 7,300. So this means the tax she's going to be paying would be on this amount here. 20% on 7,300 is equated to 1,460. So Sarah's yearly tax paid would be 1,460. Next we have Sam the solicitor. We're gonna change the yearly salary over here, so to 60,000. Sam is on £5,000 a month. Her personal allowance is the same as we've seen here before. Her taxable income has changed. Taxable income in Sam's case would be 60,000 minus her personal allowance, which we have to be 47,300. This is above the basic rate. That means she's going to be paying 20% on the first 37,700. Anything over that she's going to be paying 40% on. On a basic rate, she's paying the amount of 7,540. She's going to be paying the middle rate also, so she's paying 3,840. Sam's total balance or total amount of taxes paying is down 11,380. Let me just check that again. Yes. So moving on to Ben the broker on big bucks in the city is 100,000, a big wage. So Ben is earning £8,333 a month. Personal allowance we keep it the same. So again, we got the taxable income, which is, to reiterate, is the yearly salary minus the personal allowance, which you get to be 87,300. So we can see this 87,300 is above the basic rate of 37,700. Ben will be paying both the basic rate of tax and the middle rate of tax, same as Sarah. In the basic rate, Ben would be paying 7,540. In the middle rate, Ben is paying 19,840 pounds. So the combination of that would give you the total, which is there at the bottom. Don't know if you can see, we're going to write it here, of 27,308 on three different salaries. Sarah on 20,000 paying 1,460 pounds in tax. Sam the solicitor, it would be paying 11,380 pounds in tax, and Ben the broker paying 27,380 pounds in tax. Next, we're going to move on to national insurance. And we're going to break down what we've seen on the UK Gov site. So before we move on to the next stage of national insurance, guys, I'm going to ask you to hit the like and subscribe button. Drop a comment if you like the spreadsheet I'm using. It really helps me and the channel out. Nice to see you've hit that like and subscribe button. So national insurance, doing the same thing as we did for income tax. We're going to be going over what's being said on the UK government side and break it down into more simple and comprehensive steps. National insurance works in weekly amounts. So the three thresholds for national insurance are: first threshold is £183. Anything below this amount is 0%. Anything from 183 to 967 is 12%, and anything over 967 pounds a week would be classed as a 2% national insurance payment. So what we're going to do is take Sarah's wage. Sarah's on 20,000, which amounts to a £416 weekly salary. Personal allowance for national insurance would be this figure here times by 52 weeks in a year, which we get a yearly personal allowance of national insurance to be 9,516. The national insurance that she's going to be paying is her yearly salary minus her national insurance allowance, gives you, so she's going to be paying 12% on this amount here, as her weekly amount is over the lower limit of 183. So 12% of 10,484 equates to 1,258. And we input the national insurance amount of, we're going to be doing the same thing for Sam the solicitor. Sam the solicitor is on 60,000. Sam's weekly wage is 1,250. The personal allowance is the same at 9,560. She would be paying national insurance on the remainder, which is 50,484, equating to 970. As we can see, the 970 is above that threshold that was here. That's why Sam is paying national insurance both on the middle threshold, third threshold. Sam's national insurance payments equate to 5,060. We're going to do the same for Ben the broker on 100k. Ben the broker on 100k, the same steps follow. He's going to be paying the national insurance on this figure of 90,484. Ben is well over the weekly amounts for both. Ben the broker's national insurance payments equate to 5,860.48. The third tax or repayment, I mean, if you went to uni, you would know we made the assumption that all three, Sarah, Sam, and Ben, went to uni, hence they would have to be paying student loan repayments. So what we're going to do is take again the UK government guidance table, which is here, and we're going to break it down. To keep things simple, we're going to assume all three people are on the plan 2 repayment. So I'm going to start off with Sarah earning 20,000. So the limit is 2,214. Anything over this, you pay 9%. As we can see, Sarah earns a monthly amount of 1,666. Hence, Sarah pays 0 in student loan repayments. So if we move on to Sam was on 60,000. Salary amount is 5,000, which is over the limit of 2,214. Hence, Sam would be paying 9% on this amount that's over. So we have Sam's repayment would be monthly of around £250 or a yearly amount of 3,008. Let's move on to Ben. Ben on 100 grand a year. His student loan is he gonna be paying back? Again, Ben is over the limit of 2,214. Hence, he's paying 9% on anything over this amount. £550 a month. Almost a mortgage there, guys. 6,608 pence a year in student loan repayments. So now, guys, we've got the tax paid, the national insurance, and the student loans. So let's see the total deduction of it would be the tax paid plus the national insurance plus the student loan. So as we got the total deduction of all three people, we can work out their take-home pay. Final three columns I've taken the total deduction. This would be the tax paid, the national insurance, and student loan repayments for all three. Total amount of deductions for Sarah the secretary is at 2,718. For Sam the solicitor, the deductions from her gross wage is 19,449, and Ben the broker, deductions were 39,848 pounds. So if we compare the actual salary, which is gross, what the employer says they give you, to your actual take-home pay, Sarah the secretary is actually taking home 17,281. Sam the solicitor is actually taking home 40,550, and Ben the broker is actually taking home only 60,151 pounds. So we can see, guys, that 40,000 pound near enough deduction that Ben is making. It makes you wonder, earning more is not necessarily always better. So I'm gonna leave it there, guys. If you enjoyed this video and found it informative, drop a like and hit that subscribe button. If you want a copy of this spreadsheet, drop a comment in the comment section below with your name and email, and I'll be more than happy to provide you with a copy. And remember, an investment in education always pays the highest returns.